This video, I'm going to share with you what I learned about investing in a warrant, investing in warrants. And earlier, I didn't know anything about warrants. I thought I made a mistake, but not all mistakes turn out bad. I made a mistake that became profitable. I learned something new. And it's because I took a chance, and I'm really grateful I did. Let me show you this here. Let me show you that DraftKings went public, and I bought 6 shares at $19.94 because that is what I was able to afford that week. But earlier, I didn't understand this when I bought them. DraftKings warrants, my average was $4.14, and I bought 30 shares. And I wish I bought a few more. However, I already made a profit when I took the screenshot. However, now I understand. I want you to know. First, let's get into what a warrant is. A warrant is a way for a company to gain capital while still following the Securities and Exchange Commission regulations. Because the Securities and Exchange Commission regulates the number of shares a company is allowed to issue at one time. So they might extend it, and that's where a warrant comes into play. They're not as valuable as a regular stock sold. They're a little cheaper, from my experience. A warrant is simply the right to purchase shares of a stock at a certain price, a more affordable price in this example. Warrants are good for a fixed period of time. Why is that, folks? Because warrants expire, and you can lose your money if you're not aware of that. You're not locked in when you buy a warrant. You're always free to decide that you don't want to buy the underlying security. You can sell a warrant and make a small profit. You don't have to exercise the warrant. Exercise the warrant. DraftKings, their warrant strike price is $11.50. Why tell you that? Because now I received a message. Let me show you this message first. And you have to check your messages. Originally, let me show you this too. Oh boy. Originally, the warrant expired on 6/30/2026, but the company ended up having a full call, so they changed that expiration date. This is just an example of the warrants that I bought, and I wish I bought more. I started in February 2020, and the last one I bought was in March 2023. I wish I bought a few more, but at least I have a few. Lesson learned, and it's good. It's a good mistake. I received this message that the cutoff date, they changed it, and they're allowed to. They sent me notification. My responsibility to read the notifications. The cutoff date was 6/25/2020. And if I didn't exercise the privilege on DraftKings Incorporated warrants due on 6/30/2026 will expire due to full call. They changed the expiration date. Now, I can, if I didn't read the message, I can receive 1 penny per warrant before June 30th, 2026. If I did not exercise the warrant before June 26, 2020, my warrants will be void and no longer exercisable, and you will be entitled to receive only redemption price of 1 penny per warrant. Now, because I bought 30 shares of the DraftKings warrant, the strike price is $11.50, even though the price of the warrant at the time was $31.47. Now it's worth more. I'll get to that in a moment. But because I took the chance to invest with a warrant to help the company gain capital, they gave me an opportunity to buy shares at a much lower price, which is $11.50. That's the deal. I had to call up Fidelity, and they did it over the phone. You can't do this within your account. I could have sold the warrants as is and made a profit. I could have done that. My average cost was $4.14. I could have sold 30 shares. At the time I took the screenshot for $19.90. But I wanted to reinvest. I wanted to buy those stocks at $11.50. So now I'm a proud owner of 36 shares of DraftKings Incorporated. My average cost, because I bought 30 of them at $11.50, brought down the price, my average cost, to $16.35. And when I took the screenshot a few days ago, the DraftKings Incorporated stock was up to $41.95, which gives me a profit. Well, I'm in the profit. $921, $921.46, but my cost after everything settled was $588.74. So $921.46 minus $588.74. So I made a $332.72 profit so far. But this is how much I own right now. That's the balance. Do you get it? I subtracted $588.74 because that was my total cost for the 36 shares. And I subtracted it from the $921.46, which gives me a profit of $332.72. So that's what a warrant is, guys. You must exercise your right to buy them at a strike price. And the exercise price was $11.50. As you can see right here. I just did a quick lookup. So I hope you learned something, guys. I'm learning, but this was a good mistake. I learned something new. I'm very grateful. I'm a proud owner of 36 shares of DraftKings, and I'm going to keep this in there for as long as I can, because I really truly believe that this DraftKings, if you're not sure what DraftKings is, I did look that up. It's a gambling. I wanted to diversify my portfolio. It operates as a digital sports entertainment and gaming company. It provides users with daily sports, sports betting, and iGaming opportunities. It is also involved the design and development of sports betting and casino gaming platform software for online and retail sportsbook and casino gaming products. It was just another way. I stayed on top of a company. I saw them expanding. I'm happy I knew they went public. I bought a few shares, and then I learned, wow, I know what a warrant is now. I'll take that offer. So I did. Woo. So right now, this is what I own, 36 shares. I'm very proud. Okay, guys, I hope you learned something new. Stay in the know, continue to grow, and invest wisely. I'll see you soon, folks. Have a good one. Bye, guys.